Hey folks, Dan Frio here with your closing bell for October 29th, 2024. So mortgage rates right through here, they inched up a little bit more today, but all of a sudden, like midday, the market did a 360. Okay, what happened was mortgage rates were going up and away, and then all of a sudden the market just turned. And well, let me show you. So what we follow on this channel is we figure out or try to figure out what the heck's going on with mortgage rates. Okay, and then I advise you of programs and everything else. I'm actually a mortgage loan officer, and I'll give you all my information at the end of this video. But here's where bonds traded today. So what we follow here on the channel is the MBS market. What that stands for is mortgage-backed securities. It's a bond that trades on Wall Street. That's yield is the biggest component of your mortgage rate. Okay, so here's how this chart works. It gives you the price of the bond right up through there. Okay, most of the charts give you the interest rate, but this gives you the price. So how do we figure out, is this good or bad for interest rates? Well, how you have to understand this is if a price of a bond goes up, the price of a bond, if it goes up, the yield drops. Okay, and then vice versa the other way. If the price goes down, then the yield goes up. And let me explain it to you. I try to do this once every couple weeks so people understand. Let's show as the price drops how the yield goes up. Okay, so let's say, for example, and you have to understand how bonds work. So let's say I have this bond certificate and it's worth $100. When I trade it in at the end of its maturity, I get $100 back. Okay, so let's say today I give you $100 for that $100 bond. All right, so I give you $100 today, and let's say for example purposes that the bond matures next year. So then next year the bond matures, and I give you my bond, and you give me my $100. That's the face value of the bond. So I gave you $100, I paid $100 for it, and I got in return $100. What's my yield or my interest rate? It's zero. Okay, so now let's drive down the price to show you how rates go up or yields go up in this case. So let's say for example, I give you $50 for that bond, and we know the maturity price is $100. So today I give you $50, you give me my coupon, I wait a year, and then I give you my coupon or my bond issuance, and you give me $100. So in that case, I gave you $50, you gave me $100 back. What's my rate of return at the lower price? 100%. So do you see how my interest rate or my yield at $100 was zero, and as the price went down, rates went up. So my yield went to 100. So it works kind of this way. If the price went up, then rates are coming down. So we love this through here. What you're seeing also is in this charts, it tells me every investor, we call them investors, every bank, and what they did. Did they reduce rates? Did they cut rates? Did they increase rates or what? And so I know what lenders are doing what right at basically the split moment that it happens. Okay, so that's the context behind this. So now what we're trying to do is figure out right through here, why did we go from basically flat or down and all of a sudden just jumped up? Well, I follow videos every day and I try to find this information out for you, but this young lady kind of puts a lot of it into context. It's about a 7-minute video. I'm going to pause her along the way. She hits everything that we're looking for in regards to the election, what bond yields are supposed to do, what they're looking for next year. So this is, it just popped up on my video streams and I have to share it with you guys. So let's get her comments on the markets. And then when we come back, I'm going to show you how the equity markets are faring today. And then also what the CME Fed Watch tool is telling us, because the Fed's meeting next week. Okay, so they're going to come out next week and do whatever they're going to do. And we're trying to pinpoint it to see what they're doing. So let's check out this video. This young lady, she's phenomenal. And then when we come back, I'm going to put all this together for you to understand it a little bit better. So let's take it away.
Investors tracking the rise in Treasury yields. A host of economic data in the next week and the election could cause more volatility. Join us now, Subhadra Rajappa, head of U.S. rate strategy at Societe Generale. And it's like basis points, but I'm obsessed with what the 10-year, it's 430. It's gone up. It's gone up almost every day since they cut, and it's still not out of control. It's probably all normal, and you're going to tell me not to worry, but is it signaling anything about the return of not necessarily the vigilantes, but just people that might be a little worried about that the Fed has declared victory too soon?
Funny you said vigilantes, because if you watched this morning's video, a lot of the data was telling us vigilantes have jumped in and they're trying to kind of skew the market so they can make a little bit more money than they otherwise would. So there might be some things behind the scenes actually taking place that we don't know about. So let's get her take on it.
Inflation, is there anything to that?
Not really. I mean, the data has actually justified the market pricing.
What does that mean? The 430, because of the strength of the economy, it should be at 430.
Yeah.
Okay.
So we had this 50 basis point rate cut in September, and since then the data has been very, very strong. We got a very strong payroll print. Retail sales has been very strong. Revisions to GDI and GDP have been very strong. You're tracking 3% GDP for the third quarter, and there's a decent amount of momentum going into the fourth quarter.
Yeah, and new highs in the stock market, and talking about more cuts. You just made the case for they shouldn't have cut in the first place, and they certainly shouldn't cut from here.
Well, that was our view, actually, believe it or not. We were thinking the Fed would probably be on hold for the remainder of the year. And then the market quickly started pricing in a 50 basis point rate cut in September. And even then, I would say that we think that we were thinking that the Fed should have a much more measured pace of easing. And now the market's very much aligned with our view that the Fed will take a much more measured approach on policy. I'd say the last 10 basis points of the sell-off might be related to the elections. There's a little bit of a caution heading into the elections next week. You're seeing that especially play out in the bond markets, perhaps in the strength of the dollar and other assets like crypto. But for the most part, I would say that the move in yields has been much more fundamental than related to the elections.
Doesn't it seem like both candidates would be inflationary to some extent? At least what they're talking about.
It's possible, but for the most part, I would say that the tariffs is where you're going to see that step up in inflation for 2025. Really, the market is still, in my view, discounting the magnitude of the impact that we could get from the tariffs, expecting that that's going to be much more of an opening salvo for a negotiated deal, and that we might not see that 60% tariffs on China and 10% tariffs on all imports. If we do something anywhere close to that magnitude, I think that that's going to be somewhat inflationary for 2025. Beyond that, of course, it's the rate of change, and the impact is going to be a lot more muted.
How have the auctions been going? When will we test the water for whether we can, keep rates coming down, even though we're trying to sell so much, the U.S. government?
For now, I think that it's not that much of an issue. If you look at, we get a Treasury refunding announcement on Wednesday. And what you're going to see is that the Treasury is probably going to keep coupon issuance sizes, relatively unchanged for the next fiscal year. So you really need to start seeing those coupon issuance sizes increase meaningfully. And that's going to come after we get a little bit more clarity on what the policies are, who wins the elections, what they're planning to do on the fiscal side. For now, I would say it's much more status quo. So sort of an immediate reaction for me is going to be on the inflation side, depending on what the outcome of the elections are. But for the most part, I think that for a meaningful increase in coupon issuance sizes, that's something that we're thinking about for next year, not this year.
So I want to get to that point because she's mentioning that the Treasury, how much bonds are going to be issued. They came out, and I looked this up just the other day, and this was October 20. Well, this just was the other day, and it came out. It said during January through March of 2025, they expect $823 billion in privately marked out debt, cash balance of $850. That is considerably higher than where it's been in the past. So that's she kind of threw me a little bit in that comment, but let's keep going on to see where she kind of clarifies it up possibly.
Happening with my sometimes I think it's the GERD. I do. It's not a cold or anything like that. It's like I share a lot.
He's right. Sometimes too much.
Share a lot with you. I'm trying to bring them in to understand what's happening. I don't think that inflation necessarily is as under control as people think. Is it? Is it possible that we could be in the beginnings of at least being disappointed on a continuing downtrend? Not necessarily going back up, but is everything great right now?
So far, so good. It feels a little bit like a Goldilocks scenario, but typically, if you look back at inflationary episodes going back, historically, even to the 70s and 80s, the decline in inflation or the disinflationary trend tends to take a lot longer than people anticipate. And that's what you're seeing in the Fed's projections as well as our economists' projections, where the normalization to that 2% inflation target could take a couple of years or longer. So that disinflationary path is going to be a lot slower than people anticipate, especially because the market's going to react if the Fed continues to cut rates. Because in an environment where growth is relatively strong and the job market is holding up, when the Fed's easing policy, that's something that's going to be somewhat stimulative, and you could see perhaps a tick up in services side inflation as a result of that.
You've got oil, which is cooperating, but then Boeing, those people are not cooperating in terms of, I mean, they're going to be.
You mean in terms of the inflation picture?
Yeah, you got strong labor. They can ask for a lot. And the strikes, they get, we never used to talk about 35 and 40% wage increases, and that's what everybody wants. But oil certainly is a tailwind, I guess, at least today.
Yeah. I mean, the geopolitics are, of course, an ongoing concern. So you could see a spike up in oil. But really what you're looking at for inflation expectations is perhaps what happens next week after the elections.
So it's just tied to the election. I don't think, even the bond market says, okay, which candidate, either candidate goes in, it's going to be inflationary, but how much, are the tariffs going to be, like she said, are they going to mark tariffs up 60%? Maybe they'll mark it up 30%, 20%. So will it be as detrimental as everybody's thinking? We don't know. So a lot of bond traders are just manipulating the markets right now, waiting for this election. Once it concludes, well, even after the election, it's probably going to be a week or two while they balance all this stuff out, it will settle down. And that's everything that I'm finding out so far. It looks like, at the end of this equation, there's some relief at the end of the tunnel. So that's that part of it. Let's get over to the stock market. They're closed for the day. They're the equity markets. It was a pretty good day across here. We have the Dow Jones down 150. Now it was down 100 at the beginning. Then it was up midday, and then it gave it all back. So it's basically, look at that. 150 on the Dow, 145 NASDAQ on the upside. S&P is basically flat as a pancake. Same with the Russell 2000. VIX is moderating. Let's see where cryptocurrency is right now. 72,400 there, and oil continues to cooperate. It's still staying under that $70 number. So that all the good news there. Let's see. This just popped up. Stock making the biggest moves after hours. Alphabet, Visa, Chipotle's, and AMD. We'll discuss those tomorrow morning, how those markets change. And then let's get over to the CME. You remember the Federal Reserve is actually meeting in 8 days and 20 hours. What are they going to do? That's the contentious part of what's going on right now. Well, it's saying right through here, there's basically no uncertainty that the Federal Reserve's cutting a quarter percent to the federal funds rate next week. That's what this market is telling us. There's only a 1% chance that they won't. So almost basically a 100% chance the Fed will be cutting next week, and we'll have to figure out where it goes from there. So we got the Fed next week, and we got the election coming up as well. Those are going to be huge market movers. So my name is Dan Frio. Let me get back to where I was at the beginning. I'm actually a loan officer. I'm not a financial analyst. I'm not an economist. I'm just a loan officer trying to win your business. So if you're out there trying to buy that first house, maybe buy that second house or investment property, looking to refinance, you're an investor looking for a DSCR loan, maybe you need a reverse mortgage or a debt consolidation, love to help you. How do you find me? Go to therateupdate.com. Here's our website. You can go to the Apply Now link right up through here. You can also, if you're looking to buy that first house, please check out our grant finders. Don't miss any free money out there for you. But if you're ready to get things moving, all you need to do is scroll down to the bottom. Well, you can hit the Apply Now button right up there at the top. Or if you want to give us a call, you can do that. And it's right down through here. Our 800 number is there. And my email address is right through here. And yes, that is me. And I will be the one answering. Take care. God bless. Have a fantastic evening. And I hope to get this thing out of my eye here shortly. Have a fantastic night, guys. See ya. Bye-bye.